Hello everyone. Today we're going to analyze the cryptocurrency Solana, but first, a brief introduction. The year 2026 is approaching, and I'm going to Vienna, Austria to celebrate it. So I'll be away for about a week. I'm not sure if this is the last review of the year, but just in case, I want to wish you a happy new year and hope that it will be better than the previous one and that all the best things in life happen to each of you. Now let's take a look at the Solana chart and start with the weekly candles. Notice that in April of this year, Solana dropped down to the 200-week moving average, the orange line, breaking through the green 50-week and the red 100-week averages, after which there was some local growth. And now we've broken through all the moving averages again, which means the 200-week average is acting as a magnet around the $103 area. And since we've already dropped down to it, it's quite possible that we could break through it as well. According to the RSI, our target zone is the 30 level and we haven't reached it yet either, which means the decline could continue. Now let's take a look at the chart I've prepared. Let's start with this large blue trend line. It is drawn based on the lows of December 21st, 2020 and December 26th, 2022. Notice that we've just broken through this trend line. So, can we move back up to it? Yes, we can. And test it right around the area of the 50 and 100-week moving averages, which is at $170. Notice that Solana was rising and then it got stuck for a very long time in a sideways range, which I marked with a yellow rectangle. The upper boundary of this range is the closing price of the candle from November 18th, 2024. And as you can see, we tested this boundary twice after it was formed. And the lower boundary is the lowest candle close from August 26th, 2024. Once we fell out of this range, then returned to it and couldn't break through upwards. Now we've broken down through it again. This means that we have not only a downtrend according to the candles, but also according to this markup. So, our target levels are the white level at $112.45, the lower white level at $89.44, as well as the 200-week moving average around $103. But in any case, we could return to the area of $170 to these averages and test this blue trend line. But for that, we need to see two things. First, we need to see a bullish engulfing pattern on the weekly candles when a green candle engulfs a red or orange one. And the second condition, we need to see that the weekly candle has closed above the level of $127.66. For now, this is a downtrend with potential targets at $112.89 and there are no reasons to buy. Let's clear everything and switch to the monthly time frame. What can we see here? We can see that the October candle engulfed September's growth and the November candle engulfed 2 months of growth at once, July and August. Accordingly, we have a downtrend on the monthly candles as well. But we've reached a very important support level, which we can mark at the close of the March 2022 candle as $122.77. Notice that not a single candle before this closed below this level. And right now we are in this area. If the December candle closes lower, then there is a high chance of a move at least to the area of the 50-month moving average, which is $106.50. And technically, a decline is visible into the area of this zone where the drop paused for a while in January 2022. This is around the $100 mark. So the monthly candles indicate a decline, and the weekly ones also point to a decline. Let's look at the daily charts. The situation on the daily candles is somewhat different. First of all, note that the last time we tested or broke through the 5-day moving average was right here at this point. That was in October, on the 10th of October this year. After that, we approached it a few times but never actually touched it. Therefore, a rise to the area of about $130 to $135 is in principle possible in order to test the 50-day moving average. But for that, we need to see at least a bullish engulfing pattern. Let's see if we have a bullish engulfing pattern. Yes, we do. This significant green candle completely engulfed the previous red candle of the sharp decline, specifically from December 18th. And this decline, which lasted several days, did not engulf this green candle. So, according to formal indicators on the daily time frame, Solana has reversed upwards, and its target level is the base of this red candle at $129. The next technical target level is around $130 to $135, which is the area of the 50-day moving average. Therefore, we draw the following conclusion. According to the daily candles, in theory, you can make purchases, but your stop should be set below or at the base of this candle, in the area of $117.40. On the 4-hour time frame, Solana has not been able to break through the 50-period moving average for quite some time, but at the same time, it has repeatedly tested the orange 200-period moving average. Taking into account the bullish engulfing pattern on the daily candles and the potential for a long position, we can assume that as soon as Solana breaks through the 50-period moving average once again, it could immediately make a move toward the 300-period moving average, around the area of $135. But I want to emphasize, whether you are opening short positions or long positions, always set stop losses. The overall conclusion from today's analysis is as follows. The daily candles currently suggest growth toward the area of $135 and potentially even $170. But globally, on the weekly and monthly timeframes, taking into account the breakout of the global trend line, we are still looking downward. And a similar situation is observed with Bitcoin. Subscribe to the channel, our audience is steadily growing, and leave your comments. See you in the next videos. Goodbye.